Hello and welcome back. Hope you're good, guys. And I hope that you can hear my voice. Do you hear my voice? Okay, so welcome back. Hope you're good and doing well. Let's start for this week. And before going to look at the charts, we're gonna look at the calendars quickly. We can use this calendar as well. So the important news event is going to be the Friday one. So we had yesterday, we had Donald Trump inauguration. So we had seen some movements because market was expecting that Donald Trump gonna impose some tariffs, and we have seen some movements because of those announcement from the Donald Trump. So we haven't seen any tariff news yet, but yeah, the Trump is saying that he's going to impose tariffs on 1st of February on Canada, which is causing the volatility on the CAD. So the most important event for this week is going to be the Friday one, when we are having rate decision on the Bank of Japan. So Bank of Japan is going to announce is going to raise the interest rate, which is the key event for the whole week, and can set the direction of the market for the next couple of months. We can say that 2 or 3 months or maybe a quarter. So the interest rate previously was 20.25, and they are looking to raise the interest rate up to 0.50, all right, on Friday 24th of January. So last time when there is the interest rate, we saw that the carry trade wound up very sharply, very quickly, caused the volatility into the market. So we may see similar kind of movements into the market. May not see the sharp reaction at that time, but later on, when carry trades start winding up, we may see movement in the market. So we may see a risk of move in the market. So this is the main event which you are looking on Friday. So as said, that we may not see movement right after they announce the interest rate hike, but after once the investor gonna realize that it's time to wind up the carry trade, that can create a strong reaction into the market. So this is the event which you are paying attention very closely. So I'm gonna go and look at this calendar quickly. Yeah, so high impact news is going to come on CAD, CPI data on CAD, so you're watching that, and CPI data on the New Zealand dollar as well at 9:45, and core retail sales tomorrow on CAD, and on Friday you are looking at the interest rate hike from the Bank of Japan. So this is more important event. There is a Bank of Japan rate decision than any other event for this week. So last time when they raised the interest rate, if we're going to quickly check that, when they raised the interest rate, they raised the interest rate on 31st of July 2024 with 15 basis point. All right, so they went up from 10 to 25. So this time they are looking to raise the interest rate from 25 to 50. So more likely they're going to raise the interest rate. Market is expecting that they're going to raise the interest rate, and let's look at the 31st, right? So we are looking at the 31st of July reaction of the market. 31st July 2024, what market did on 31st July. So I'm gonna look at the Nikkei index first quickly on 31st of July, and this is when the carry trade wind up. This is where the carry trade, we saw that the carry trade after the interest rate hike. So they raised the interest rate on 31st of July, all right, 5 EM my time, all right, 31st of July, and then we saw that the carry trade wound up, all right, and then We saw a very big move over there. There we saw almost 21% drop. Okay, this is a huge drop. So that drop did not happen right after that, after they raised the interest rate. All right, so it took some time. So it took almost 1, 2, 3, 4. All right, so 4 means 8 hour, 4, 16 hours. So it took us 16 hours, and then we saw the carry trade reaction, and then we saw a big move over there. So is it going to happen this time again? Investors going to wind up their carry trade again? All right, so we don't know, but you have to be prepared for that, right? We saw that if I'm going to look at the US 10-year yield. All right, so on 31st of July, we saw market was preparing for that rate hike. All right, 31st of July first. That's the 31st of July here. Yeah, so 31st of July we saw a sell-off over there. Almost we can say that the 16 basis point drop on the US 10-year yield. All right, so from 429 to 415, and then we saw the rate hike, and then the US yield also went lower aggressively. Okay, so we already have this time that the last the drop already happened over there on the US 10-year yield, which is, let me remove that, which is 27 basis points. So last time we saw 13 basis point, and this time we are having 27 basis point drop. Remember, we were expecting yield to drop last week, and we had a drop over there. So it was preparing for the Donald Trump inauguration, caused that yield to continue to keep pushing more higher because of the tariffs. All right, so we have seen that the drop has just begun over there already on the US 10-year yield. All right, so some drop has started over there. So we may see drop all the way back to this previous low. Right, so 410 yield can drop all the way up to 410. All right, so sharp drop can happen. So this is what you are looking actually during the Bank of Japan rate decision. All right, so the drop to be sharp and continue to keep dragging lower. So 10-year yield to go all the way to 10-year yield to go all the way up to 410 or 412 in coming months. All right, and Bank of Japan can drive that, so sharp move can happen. So we may see drop aggressively over there. So if that drop comes, okay, then the last week we were expecting, let me go to the yen pairs. All right, so yen pairs we were expecting yen pairs to fall, right? And dollar yen last week we were talking about the dollar yen that was lagging, and we may see dollar yen to catch up. So we saw dollar yen to start falling, and others are at the low, this low, right? And dollar yen was lagging. So we may see drop on the dollar yen during the Bank of Japan rate decision, and that's what you are looking. All right, if rate hike comes from the Bank of Japan, so you are looking. So we can see that the move has already begun over there on the dollar yen. All right, this yellow line is drifting lower, so the move has begun, and we may see all the way back to this previous low, this yellow line, previous low. Price can continue to keep falling over there. Okay, so the pair you're gonna watch gonna be the dollar yen and 10-year yield. So 10-year yield is already lower from that top with 27 basis point, and we're gonna look at the dollar yen. Dollar yen is also dropped. Okay, and last time when we had a rate hike from Bank of Japan, we saw a very big, almost $13 move on the dollar yen because of the carry trade wind up over there at this area. Okay, so we had intervention over there and breakout, dollar went lower, Then an interest rate hike came over there from the Bank of Japan, and then we saw a strong breakout, and bang, we saw a big move to the downside on the dollar yen. So you are looking similar move, this breakout, okay, at the current price when the rate hike comes from the Bank of Japan, okay, and the dollar yen to drag lower. Okay, so remember last week we were expecting price to hold that, all right? So we were expecting it to at least, 158, all right? So 158 area, so 158, 159 area, yeah. So we saw a correction, and then bang, we got a breakdown, and then now we are having a similar correction. Okay, this correction is already trying to break down. The reason why we are not having breakdown is that the Donald Trump comments caused that dollar to go sideways. We saw a sideways move on the dollar at the moment. Okay, so if I'm gonna look at this top to hold, we got a breakout already, but that breakout did not continue. So okay, so this is what you're expecting for this week, dollar yen to do that. Simply, if they don't raise the interest rate, we're not gonna see drop. Okay, so we will see again some pressure for upside. Okay, but we are having warnings. The last week I have shown you comments from the Ministry of Finance and diplomats. They were saying that they are not happy with the market, okay, with the speculative move. So we are having those comments again consistently from the officials from Japan, saying that the moves can happen over there because of this rate decision from the Bank of Japan. So better be prepared for that. And if breakout comes, that what you are looking. So okay, so there you go. So disorderly foreign exchange movements are undesirable. They are clearly telling you that be prepared for the moves. So if they raise the interest rate, okay, we may see again similar kind of reaction into the market, the reaction we have seen back in 2024, 31st July 2024. All right, so be prepared for that. Okay, and if the breakout comes, then you are looking for the similar kind of move. All right. So they were saying that. So Mimura expects Bank of Japan to make independent policy decision this week. Okay, Mimura watches U.S. developments for currency. So they are telling that be prepared for the moves. Does not comment on Bank of Japan's monetary policy. Last week, what I have shown you, what comments I have shown you. They were saying that the dollar yen was pushing higher. Okay, the comments start to come over there, and we got some move. Okay, bang, and then again, interest rate hike comes, we may see this move. Okay, and this is what you are preparing for. Very much similar like 31st of July. Okay, we may not see sharp aggressive drop on the dollar yen. Okay, like I said that earlier. All right, so after 16 hours we saw the breakout, and then price went lower sharply. Okay, and there is another interesting thing we need to look at, and the interesting thing is, if I'm going to look at the yields, so the interest rate. All right, so if I'm going to look at the interest rate, So okay, so previously, so we clearly can see that the Japan was facing for disinflation, right? And we are having a big drop over there. There is interest rate in 2000, all right, at this area, and we saw recession in 2000, all right, and then again we saw interest rate hike from the Bank of Japan in 2008 at 0.50, all right, and now we are having again interest rate hike. All right, so I'm gonna look at this. All right, so last time in 2000 they raised the interest rate up to 25 basis point. Okay, in 2007 they went up to 0.50. all right, and now on Friday they're saying that they're gonna raise the interest rate up to 0.50. all right, they held the interest rate higher for here almost 2 years, okay, and less than a year I guess here. Okay, so 2 years they held interest rate higher. Yeah, and what we saw 2008 financial crisis, bang, they cut the interest rate into negative territory after that. All right, so we are heading into that direction again, right? How long they're gonna hold the interest rate higher at there, we'll see. Okay, but higher interest rate can cause carry trade to wind up sharply, the way we have seen back in 31st July, okay, when this move came, okay, this move, when they raised interest rate with 15 basis point, okay, this move, and that caused that $13 move in the dollar yen. Okay, so we are preparing for that again. If we get that another leg higher from the Bank of Japan on Friday, okay, highly likely we're going to see the carry trade going to wind up in coming days. All right, and that's where the yields are going right now. Okay, and that's where I was asking you to, the direction of the 10-year yield on US is the only downside. Okay, the other factor which is important to keep in mind, and the factor is that we are having a new government in the US. Okay, and having new government needs funds. Okay, simply they need funds, they need spendings, all those stuff, so they need more borrowings. Okay, and having having rates higher at those levels means more borrowing cost. US government has to pay a lot of borrowing cost. All right, so the only direction is to the downside of the yield. Okay, so once you're gonna see that the yield is going to drop, all right, which is already dropping. Okay, if I'm gonna look at the clean chart, we can see clearly. So the yield is very important. Okay, the yield, the 10-year yield gonna lead us that where the rest of the market is going. Okay, so you're watching what? You're watching the yen pairs. Yen pairs already gained. Okay, yen is already gained, and that's leading us that if we are having hike from the Bank of Japan, what we're gonna see more strength on the yen. Okay, so having more strength on the yen is also a lead for that the yield is gonna go down. We may see more bond buyings. All right, so more bond buying means that we may see a drop on the equities. Okay, so more drop on equities means that we may see strength or crash, we can say that on dollar pairs, or dollar can gain slightly. So there is a risk for crash on dollar pairs, but once that crash gonna be over, we're gonna see weaknesses on the dollar. The dollar gonna go there where yield is going at right now. Hopefully you understand that sequence, and that's the sequence which you are looking for. All right, so I just forget that what I was about to show. Yes, yield. Okay, so yield, I was about to show that yield. Okay, so we have, I'm gonna remove that weekly chart. There is the drop. All right, so some drop, slight drop came over there, less much drop, which is a big. So 482, it dropped from 480 to 450, almost 30 basis point drop. All right, so this drop hasn't appeared yet on the dollar pairs. Okay, this drop hasn't appeared over there on the currencies yet. All right, and that's what we were talking about last week. So hopefully you understand that what you're watching the rate hike from the BOJ, yields to go down, yen to gain, equities. Okay, equities can stay under pressure. We may not see more upside on equities. Last week we were expecting equities to stay trending, risk on assets to stay trending. We got that move. Okay, but this week we may not. We can still see the risk on sentiment into the market till Friday. But after the Friday, we miss. Risk on sentiment can shake a bit. All right, and still crash. Okay, or crash means still we can see another leg on the dollar. Okay, that's the point. So if I'm gonna go to and look at the dollar, okay, or dollar pairs, okay, just for your understanding that what I'm saying. So if I'm gonna look at the Nikkei index, and just for your understanding, I'm gonna look at the Australian dollar, and we'll compare that with the 31st of July. Okay, this is the 31st of July. Okay, so there you go. So this is the 31st of July. Okay, we saw rate hike from the Bank of Japan here at this area. On 31st of July. So we saw after 16 hours, okay, we saw 16 hours passed, and then carry trade, wind up over there, and then we saw a crash. So we saw a rate hike over there. Okay, Bank of Japan, there is the interest rate on 31st July, and after, all right, more than 16 hours, we saw a crash. Okay, why we saw that crash? Okay, why we saw that crash? While Bank of Japan raised the interest rate, dollar yen was falling. Okay, dollar was falling against the yen. Okay, but why dollar was not rising here? Why dollar was going against that? Okay, let me compare that chart to. Okay, so if I'm gonna look at the 10-year yield here, and look at the dollar yen here. Okay, this place we are talking about. Let me clean that. Okay, so at this place we're gonna look at the 10-year yield. That's the 31st July. Let's remove that. So the 31st July is here. Okay, and we saw a drop here. Again, 31st July here. We saw a drop there. Okay, so this is what I'm talking about. Okay, why we had that move when dollar was falling here? Look at this. Okay, dollar going down. Okay, but why we had that move? Why we did not see when dollar was falling? Why we did not see this going up? Okay, why we saw crash and then price started to rise? Why we had that? Okay, so this is basically a risk of move or crash, we can say that simply. Okay, or carry trade wind up so sharply quickly. All right, or you can say that there was a very a big adjustment into the market. Funds were started to move sharply from one asset to another assets, or you can say that money started to flow into the Japan from the other assets around the world. All right, because rate was rising over there, and Japanese bonds were becoming more attractive. So big adjustment has happened over there. But the point here is that the falling yield, all right, the falling yield, when we're gonna have a drop on the yields at the current place, all right, that's going to be a sign for you to that the dollar is going to drop in coming days for longer term. All right, that's my point. So falling yields will lead you a drop on the dollar in coming days. All right, so but what you are preparing for, you're preparing for this crash. Okay, that the crash can happen. You may find another low before you start buying over there, or at a good price you can start buying the Australian dollar, or you can sell the dollar at a very good price against these risk on currencies. That's what you are preparing for. That's my point here. Okay, if crash comes, prices start going lower against these risk on currencies, you start looking for buy. So what's going to be your lead? Your lead going to be the yield. Okay, yield is already at 30 basis point drop from the 480. Okay, 480, and we haven't seen that drop yet on the risk on currencies, on dollar against the risk on currency. We have seen some, okay, but we still can see some good moves in the market. If we see, let's say, yield goes to 4, all right, 4, or maybe lower than 4, all right. So the point here is that as long as your 10-year yield is falling, you are looking for a reversal, okay, on dollar. Okay, you are looking for a longer term buying or longer term selling on dollar. Dollar is just about to end its bullish run which we were having over there, and the reason which caused that a leg higher on the dollar was the US elections. Okay, and that those US elections now passed. Again, now market gonna start moving more towards the facts. All right, so there. Okay, so 30 September market was preparing for the Donald Trump win. I have explained that last week in details. All right, so what we have seen in 2016, all right, when Donald Trump won, we saw dollar rally. Okay, and then right after, when Donald Trump came into the office, bang, we saw dollar drop. Okay, now all these things, all these indications, they are saying that the dollar was being bought just based on the tariff threats. All right, now Donald Trump is in office. All right, how he gonna deal with the tariffs? All right, market gonna start adjusting itself to those threats. All right, and more likely we're gonna see that the dollar gonna start falling like we have seen in 2016. All right, and that's what you are preparing for. Okay, so now let's move on to the currencies now. Hopefully you understand what you are watching. All right? You're watching BOJ, you're watching the wind up of the carry trade. All right, if carry trade wind up, all right, new lows coming, bang, you are looking for a longer term buying opportunity. All right, so last week we were expecting DXY to draw from there. Okay, if you remember that, we had a drop. Okay, so 15-minute time frame, we were talking about that, this correction. So we had a drop of this correction, yeah, and the leg came over there. So let me make it more simple just from one chart. All right, so you can understand that chart. So last week what we were expecting, we had a lead over there. Pound was falling, yen wasn't, Australian dollar wasn't rising, pound was falling, New Zealand dollar wasn't rising. So euro was falling, Australian dollar wasn't rising, euro falling, New Zealand dollar wasn't rising. Okay, this was a lead for you to start looking for buy. Okay, here. All right, and last week we were looking for this leg to appear over there. All right, now we are having that leg already. Okay, so the next chart which I just posted before this meeting, all right, now we started to see, right, we started to see strength. Okay, pound went up. Last week we were expecting correction to break out over there on 15-minute time frame at this area, yeah, and we got that leg higher, and these correction also started to break out for upside. All right, okay, so we are having strength, okay, on these currencies, but strength is not a kind of a big, you can say that the big move is ahead. So the real buyers are not coming in. Okay, the real buyers which can reverse the trend, like we have seen on 31st July 2014, those buyers are not coming in. All right, the reason is the risk which I have just spoken about. The carry trade wind up risk is there. If carry trade wind up comes, we're gonna see another leg lower crash. Okay, then again we may see strong buying for upside. So what is the point here? The point is, as long as your yields are falling, okay, you are looking this to keep the trend intact. Even if it tests the lows, you're still looking for that to buy. All right, so if I'm gonna quickly go to the chart, to the DXY and others, now you understand that why my structure is saying that, okay, my arrows are still saying that we still can see another leg higher, guys. Okay, another leg higher is because of that risk, okay, the carry trade wind up risk, which can happen over there because of the BOJ. Okay, so the clear chart gonna be the dollar yen. I have already spoken about that chart. I will go through that chart again. Okay, so you are looking that chart to simply break out. So here we still can see a small buying over there at this area, okay, for another leg higher, like my arrow is showing clearly. Okay, already pushing higher. So I don't have a sell opportunity right now on the DXY, so I will not go for the sell opportunity at the moment. All right, so what you are looking for, basically short term buying opportunity on the dollar, right? And once dollar test that top, all right, or from a new high, you are simply looking for this to bang crash. Okay, so where you are looking for sell is simply the dollar yen. Okay, there the dollar yen is a clear chart. You only looking bang for a big crack over there simply. Okay, there you are, which is a clear mind. So you're paying attention, price at this area, that top to hold, and the BOJ to raise the interest rate, right? And this is the move you are looking for simply. All right, this is where you are looking for that move. So the other dollar pairs, all right, so the dollar CAD we were talking about last week, dollar CAD to fall. All right, so we have some decent moves over there. We got that move, okay, then it went higher. We were talking about last week it to drop. All right, so the correction was there. We got a nice breakthrough right after we had last weekly market outlook. All right, and this breakout happened over there. All right, this breakout actually. All right, so we got that drop and the price tagged that 43 then again. So the reason why dollar is rising against the CAD is the simply tariff threat. All right, so the tariff threat we are having from the Donald Trump is causing that to let me find. Okay, this is a very all right, so Trump, the first sharp drop came over there. So let's talk about this first sharp drop. All right, so this first sharp drop. Okay, first we're going to talk about this sharp drop, what has caused that drop to happen, and then we're going to talk about this. Okay, and then we can prepare for the next possibility, that what we can expect from the next move of the market. Okay, so first we got a comment, okay, saying that the Donald Trump gonna delay that. I'm just finding that image. There you go. Okay, so the first news was this. So breaking. The Wall Street was saying that. So the news came from the Wall Street. Wall Street said that Trump signs executive orders, spokesman order. So let's just look at this. So Trump to play out trade win, but won't impose new tariffs yet. Okay, won't impose new tariffs yet. Okay, so news was clearly saying that he's not going to impose the tariffs from day one. So he has already passed more than 78 executive orders, all right, but he has given, we can say that 10 days to have some negotiations, all right. So this news caused that first drop. Okay, we had that drop because of that news. That news came, bang, and then right after that, Trump to enact tariffs at night on Canada. Okay, so tariffs on Canada and Mexico on 1st February. This is the reason for the next move. Okay, this is the reason for the next move. Now, what we can expect next from this, all right? So we know that the dollar is strong, all right? Strong since Donald Trump election. Okay, all other scenarios we talked about, yields and blah blah blah, all those things, all right? So why we are having that much, stronger selling over there on dollar, all right? We had that a couple of times. Okay, the news came from the China last week as well. Okay, that the Xi and Trump, they had a call, and call was really good. Bang, we saw a sell over there, and we saw a couple of times that sell, right? Bang, very strong sell, very strong sell. All right, this price behavior is telling us that the big players, they are waiting for a positive one directional news. Okay, once we're gonna have that positive one directional news, bang, we're gonna see change in trend. All right, we're gonna see they are big men. This is actually a big their big players are playing over there at that price. All right, big players. So the news came again. All right, the news came again. We saw the reaction again. Bang, strong move came over there for upside. Okay, but we are looking at the bigger picture, which I have just explained to you at the start. Okay, when we look at that picture, all right, we're not going to stick to that trend. Okay, at some point they're going to have a deal. All right, either he going to impose more tariffs, all right, or both parties going to come onto the table. Okay, if we are going to hear a news within next 10 days, let's say, all right, or next 5 days, that, all right, they are not going to fight. Okay, on tariffs, both countries, Canada and USA, they are not going to fight on tariffs. They are going to sit on the table and going to talk about the solutions. Okay, that's going to be a positive news, and that's what market is looking for right now. That's why we are having that strong sell. Strong selling is coming over there, and that's what you are waiting for, a positive news. All right, a positive news. So all bad news have played out already from September, and we saw a huge trending move over there, right, from this low to that low. All right, it looks like a flag over there. So if I'm gonna look at the clean chart, it looks like that we are having a flag, and we might get a breakout for upside. If I'm gonna look at the daily chart, all right, it looks like that it is a flag. Okay, so that's why we cannot rule out a crash. All right, a crash, I said that. So last time the crash happened here in this place, the 31st. Yeah, this is the place. All right, so if I'm gonna go and look at the 4-hour time frame, this is the 31st July. That's the 31st July, and then we saw a very big reversal over there, right? Okay, so again, the move started on 5/5, I guess. All right, so high came over there somewhere on 31st July, and then we saw a very big, trending move over there. Okay, so make sure you are prepared for a spike over there. That the spike can come over there, and then price can reverse very aggressively. Okay, the spike can come over there like this. Price can spike up and then again can reverse sharply. So okay, so that's what you saw previously. Okay, back in 2020, March 2020, when oil went negative here at this area. All right, and then we saw a quick reversal over there, bang. And if we look at the previous price behavior, okay, so you saw that too. So you are actually looking for this kind of price action, all right, a strong sell, which is already coming over there on your lower time frame. Okay, and that's what you are searching over there. Hopefully you understand my point. Okay, now you understand that why why this is happening. Okay, the big players, they are watching very closely at 145. All right, on the other hand, yield is down with 30 basis point, all right, 30 bps, which is a good sign for us that the dollar set to reverse from these tops. All right, so if yields goes more lower, let's say 450, 410 or 4, bang, we're gonna have a big drop over there. Okay, for a comparison, if we're gonna bring out the yield, okay, so the move started from here. Okay, let's remove that stuff from, make it a clear chart and go to the daily time frame and look at this. Okay, so we move started from here and yield was there. All right, and then we had high over there, high over here. Okay, on the dollar CAD, what we are seeing here is that the yield dropped from that top 40T. Okay, so what I said, if BOJ give us what we are expecting, okay, and this move comes all the way, drop happens here all the way up to 410. Okay, what this move can do, right? So this move can slightly spike up. Okay, but this is going to be a good sign for us that yes, we are having a top over there. Again, bang, we are going to reverse this move. Okay, like we're going to see reversal over there. So basically this is your go-to chart for how you're going to do here on these charts. Yeah, hopefully you understand that I have done so much detailed analysis here on that, and hopefully this is going to make easy for other charts. Okay, so euro dollar, simply you're looking for reversal, so I don't need to talk about these charts a lot, right? Last week we were expecting this to break out, bang, we got that move. Okay, again there is still a risk for another crash. Okay, this crash. All right, one more leg lower back to that bottom, so you're preparing for this structure like this. The wedge is showing over there. Okay, we still can see one more leg lower. Let's go through those charts quickly. Okay, so pound, we got a move. Okay, but we haven't seen. Okay, there is a point, there is a trade. How to pick a trade here on this chart? Let me quickly tell you how you can do it. All right, so last week we were expecting this move. Okay, this move to rise. Okay, we have some strength over there on the pound yen. All right, so what you are looking right now is that, okay, keeping in your mind for that crash risk, don't forget that crash risk. All right, so what you are looking is that there is still a buy opportunity on the pound. All right, okay, what I said last week, if you see that your euro dollar chart is pushing higher, okay, you are looking for a buy opportunity on pound. Okay, so if I'm gonna look at this chart, which price we are testing right now, we are testing that price on the euro, which this date price. Okay, so 7th January, this place, we tested that, we slightly went lower from that. Okay, but where we are right now, we are well below from that date on the pound. Okay, we are well below from this date. Okay, which means that we still have a buy opportunity here. This distance to clear from the pound yen. Okay, so in short, okay, if we see that the euro push up, okay, this is the place you are watching for the pound to hold this price. Okay, hold that price, okay, and give you this trade, this opportunity. Okay, hopefully you understand. The trade setup is there. As long as you see that the euro is pushing higher, you are having opportunity on the pound or upside. Again, that's what I said last week, and we have seen couple of short-term buy opportunities over there. Okay, so you're paying attention at this area, make sure you use a stop loss somewhere there, keeping the crash risk in your mind. Okay, and looking for this distance to clear on the pound dollar. All right, so looking for it to reverse for longer term. Yeah, even we are having some, comments from Bank of England that they are looking to cut the interest rate. So when we're going to see yield going to come down, okay, so market will start pricing in the rate cut from the Fed. So market is not pricing in a rate cut from the Fed yet. Okay, so same goes with this chart, and looking for similar scenario, similar picture. Okay, last week we were expecting, I'm showing 4-hour chart, 4-hour time frame chart. We are making lows. Okay, let's look at the bigger time frame. The bigger time frame is still, we are at these lows. Okay, and this is March 2020 lows. So a little crash. Okay, little crash risk is possible. Don't forget about that crash. Okay, but the bigger opportunity will be into that direction to go there, like chart is showing. So yeah, so this is what you're looking for. One more leg is possible all the way back to that previous low. All right, so if I'm gonna look at the New Zealand dollar, same chart, right? Same chart, price is holding that high, all right, this high. So we still may see one more leg lower back to the floor from that high. Okay, same structure, same wedge. Okay, so gold. Yeah, so last week what we were expecting gold to continue to keep pushing for upside and head towards 28. So it has already claimed that high, this previous high. All right, so what we can expect, simply there is possibility for another leg lower from this high. The current scenario is still bullish. Okay, we don't have a sign or indication that we're gonna have that move at the moment. All right, but again, as I have said earlier, that if BOJ raise the interest rate, carry trade, come into play, all right, then the gold can visit this low, and again gonna be a buy opportunity within these areas. All right, okay, so short-term buy opportunity, at the current price. So you're not looking for a big buy opportunity over there. All right, the move has already happened over there when we were talking about these areas for a buy. All right, so the move has already gone. So the only opportunity left is this much. So I guess you shouldn't look for buy on gold at the current price. Okay, more likely we may see a drop over there. Okay, so 31st of July. This is the 31st of July. Okay, don't forget that risk. This is a risk which can play out. Okay, we saw 31st July here, somewhere here. Okay, they raised the interest rate, BOJ, and then liquidity playout came. All right, and we saw a strong sell-off on the gold. Right, gold went lower and then buying came over there. So don't rule out that move again on Friday or next week. All right, so rate high comes from the BOJ. We still may see another leg lower. So far still short and bullish, but we don't have much potential left on gold at the current price. All right, so you are having more potential on the silver as with compared to the gold. All right, so we are still looking gold to climb up. Okay, I have to slightly change my lines. All right, so like this. Okay, we still haven't seen that move, so we are expecting this to come. Okay, now you see that the move we are expecting is this, which is already there on the gold. Okay, and silver can slightly go down back to this previous low. Yeah, if it goes there, and then you're looking at, or break out sharply and catch up the gold and go all the way back to the high. So silver will be a buy. All right, if gold keeps pushing more higher, you are expecting silver to catch up simply. All right, so silver to catch up the gold. So silver gonna be at the best place if gold, you miss the gold. Right, at these areas you're paying attention. These are 29.50. This price 29.50. Okay, so copper, I'm going to ignore the copper, right? So I said that the copper can drop last week, but I'm going to ignore it. So dollar chief, all right, similar analysis like other, we still can see a slight push up over there, all right? This slight push up. Last week we were expecting it to break out, right? It went lower, all right? So I'm going to remove that. I'm going to slightly, all right? So price can go to this top, or new high is possible over there. So that's what we are. Okay, so we still can see another continuation for upside back to that top. All right, so we can head to that top. So we are having strength on the dollar against the CAD, right? Dollar CAD going higher, testing that top, making new high. So means that you are still expecting dollar pairs to fall back. Simple. All right, and pound against the CAD, to drag lower. Okay, for one more leg lower, all the way back to that bottom. All right, this previous low. And pound New Zealand dollar to continue head lower. Okay, this is showing head lower, test that top and hold that and continue, or maybe break out and continue to keep dragging lower. Pound Australian dollar is very much similar, hold that high and continue to keep dragging lower. Euro Australian dollar, similar like last week. Okay, so there is a slight risk that we can break through that top and we can head towards that high, this high, and then again, okay, we can start falling from that high. But I said that on the other pairs, okay, BOJ rate hike, crash risk is there. Okay, when crash risk is there, you should be prepared for that. Okay, make sure when you sell this pair before the Friday, or even during that, keep in your mind that we can spike up. Okay, 31st. Okay, this is the 31st of July. What we saw drop. Dollar went lower. We saw drop. Dollar yen went lower. We saw drop because of BOJ, that is the interest rate. And then what we saw after that, bang, carry trade played out, all right, carry trade, and we saw a crash, and then again strong buying. So we cannot rule out that risk again if carry trade plays out again on Friday or next week. Okay, so you are prepared for another spike up before we are going to see that move. Okay, so falling yields means that we will see that move. Okay, we will see that move in coming weeks to months. All right, but at the moment the risk is there. So when you sell it, keep in your mind that it can break up sharply. So your stop loss should be over there. Don't trade on this. Don't simply sell this pair or any of these pairs, these four pairs, without stop loss. Okay, or all right, so these pairs, so there is a risk for crash there. Yeah, these are three, these are four. Okay, these four, so there is a risk for crash, for upside. Okay, when I say crash, means that huge spike can happen over there. On other pairs, we may not see at similar degree or similar, when I say degree, means that with a kind of similar pips. Okay, what we saw here, look at this, 700 pips move here, 700 pip move here, which is a huge 4% drop. So this is huge move, very huge move. So if you're not gonna use stop loss, bang. All right, so if I'm gonna look at this, okay, there we saw that spike. This is the spike. The spike came over there, but before that, the move has happened, or the New Zealand dollar dropped aggressively already. So on this chart, there you saw that spike. All right, and then we saw a drop over there. So keep in your mind that the risk is there. Okay, the risk is there for this short move up all the way back to that top. So when you go for short, stop loss is there. All right, on all these charts we are looking for these. All right, we are looking for these. We may not get that crash. Okay, this is not 100% confirmation. Carry trades may not wind up that aggressively the way we saw 31st July. It can wind up slowly over time. All right, slowly investors can adjust themselves, right? But the risk is there. All right, and you are prepared for that risk. All right, so this is to go higher and this is to go higher too, similarly. All right, I'm going to ignore the Euro Chief and New Zealand dollar and CAD. All right, one more leg lower. Last we were expecting one more higher. One more leg lower is possible. All right, so one more leg is possible here at these places. I'm going to ignore that. Okay, last week I have said to you guys, if we may see more strength here. Okay, and again, if carry trade risk come into play, we may see similar kind of move here. 31st of July in this place. All right, and then bang, we saw that move. All right, so yes, this will remain bullish. Okay, this will remain bullish, and this will remain bearish. Okay, we will remain bearish on these, bullish and bearish on these two charts. I don't have a perfect continuation trade here. All right, so the correction which is just developing over there, that to play out and continue to keep dragging lower. So these are the pairs which you are watching, especially during the let me go and look at the yen pairs. These are the pairs. Okay, so we do have that chart here. Okay, so this is what you are watching, especially this week. This chart gonna be okay. Yeah, same. So we have already seen the moves, okay, on yen pairs. Yen already got stronger against the Kiwi, Aussie, Pound, Euro Chief, and CAD and dollar. These two pairs are slightly lagging over there. The pair which is lagging more is the dollar against the yen. Okay, so as again you are watching the dollar yen. Okay, for the whole week. Simply you're watching, especially during the Bank of Japan rate decision. So these charts, they have already broken down the flag which we were talking about last week. Right, we were talking about this flag. Let me go to 1 hour time frame where we can see. I will look at that dollar peso. Just give me a moment. Let me pull out the moving averages. Yes, so moving averages, which time frame is holding? So two hours time frame is holding moving averages nicely. Okay, now this chart is clearly telling us that where you're supposed to pay attention. Okay, this 2 hour time frame chart clearly is telling us that. Okay, if I'm gonna look at this, we are having this trend. Okay, simply the trend is falling from that top and we are heading towards that low. Okay, we have seen higher high on the MACD, then higher low formed over there at this area, then the next higher low we've found over there. Last week we were expecting a breakout of that, right? We got a breakout, next leg appeared over there. We can see that we are in another correction. There is no momentum for upside. Okay, there is no momentum for upside for this move. Okay, you can expect that move then when you see that there is no rate hike from the Bank of Japan. They are not looking to raise they haven't. If they don't raise the interest rate, obviously you're going to see that risk on move. Okay, equity is going to go higher, they're going to continue their trend, and you're going to see that the yen going to keep falling for another leg higher. But the case is not there. Market is preparing for hike, right? And hike means that you are expecting price to stay within these moving averages, all right, and hold that high. Okay, and this next leg to appear over there up to this low, and momentum is also not there. Fundamentals are supporting this move to happen, and you are simply looking for that move to appear over there, on Friday or after Friday, and that trade to happen. Okay, so if I'm gonna So my go-to chart going to be the dollar yen, as I said that multiple time, okay? But the correction is very much similar on all pairs, all right? You can trade whatever you want. So you can hold dollar yen. If dollar yen falls, more potential going to be over there on dollar yen as with compared to the rest. When I will look at the dollar yen, I will talk about that in terms of potential. Okay, so same analysis, all right? So this is the place you're paying attention. So same analysis like the chief yen, okay? If slightly goes higher, if it is not going to change a lot, all right? If it's slightly, come on, if it goes higher, okay, it is not going to change. If I'm back to that top, we're still looking for this to drop to this low. All right, so the potential we are having on these chart is all the way to this low. Okay, so all the way they can go to this low, this much potential, which is almost $7 move, okay, or 4.5% move can appear over there. So you should target this move first, all right, not to go all the way this much target first. 2.5, 1.6%, all right, or in best case scenario $7 move to appear over there. So yeah, so again, price is losing steam for upside. We are having rate decision on Friday from Bank of Japan, all right? So price to stay below these moving averages, all right, and at least up to this low, or in best case scenario this low, or in ideal scenario $7 move to happen on the euro. So all my charts going to be into this, all yen pairs, all right? So going to be in a similar manner, similar scenario. Okay, so this move, or all the way back to this move, this low, this low. The first is this low, right? This low, the current flag breakout. Okay, and in best case scenario, these two targets going to be, yeah, and these two targets, let me check. So the $11 move can happen over there. So let's look at the technicals. All right, so we are in a correction again. All right, so small adjustment of that trend. Okay, so you are paying attention at these areas. Okay, very much similar like the euro yen. If we don't get if we get a slight bigger correction, okay, we're still looking for the next leg lower, all right, or you are paying attention that moving average to hold and next leg to appear over there. Okay, so the next chart is the dollar yen. Okay, now let's compare the potential, guys, here. Okay, if we get out the move which we are talking about, the move, let's compare it with a couple of things, all right? So first it with the yield and then with the others. Here, let's talk about the potential. Okay, so rate high comes. Okay, so if rate hike comes, which is very likely that we're gonna have rate hike. Okay, last time we saw this much drop. Okay, we saw on 31st July 2024 with $15 move. Okay, right from this breakout, $15 move. All right, but the move was much bigger if we look from there, from that top, it went up to 139, a $22 move, which is a huge drop. Okay, so on the other hand, okay, Fed, they have paused the cutting the interest rate. They said that they're not gonna cut the interest rate. They will have to. Okay, IRYY, USIRYY. Okay, they will have to cut the rates. Okay, where we are on inflation, we are heading towards the 2% target. Okay, this is a longer term. I'm talking about the longer term possibility and short term possibility. All right, so we are heading towards the 2% target, and inflation is sitting at 2.9, where the yield is sitting over there at top, where the inflation was already. So I'm not looking at the moment, I'm not looking the whole leg lower. Okay, I'm not talking about the whole leg lower. This is going to be much bigger. All right, I'm talking about just this much. All right, this much leg lower. Just give us that. All right, up to let's check the exact price, up to 360. Just go up to 360. So up to 360 will give us this leg lower. Okay, we're gonna get that leg lower. So the target gonna be from there to there is again a $19 move. So we're not gonna have that much leg lower on others. All right, so if I'm gonna look at the others, let's say okay, let's say euro yen. All right, so the last time we saw the drop because of the rate hike from there to here, okay, we saw a $13 move. Okay, but from here to here we are expecting is a $7 move. All right, $7 move, or $7 move. We test this previous low again because of the rate hike or carry trade wind up. All right, so $7 move, so $13. So where is the more potential? All right, so the more potential going to be on dollar yen. If dollar yen start going down, $13 move. Okay, so $13 move can happen over there. So you're paying attention on this chart, you're paying attention on the dollar yen. Let's go to there. Okay, and if we compare the other yen pairs, all right, so we saw that the risk on currencies, they have already fallen. The risk dollar yen is basically lagging behind the others because dollar is strong. Dollar is strong against the other currencies. So dollar is strong, and yen got stronger against the other risk on currencies, but yen hasn't got stronger against the dollar. That's the point. That's the very important point here. We need to, let's look at this. Okay, the Kiwi yen is close to this low, right? So we got the breakout from here, from this date. Okay, this date. So we are already at the floor, right? Close to this floor, heading towards that. So struggling, yen is Kiwi is struggling, all right, and heading towards that low. So we're not gonna have that much potential here. Okay, and how much? Just a $4 move. So you can compare that with others. So if we test the previous low again, like they are testing, the others are testing on dollar yen, all right, then the dollar yen is having more potential as we compare to. This is breakout, we reverse that again, we are already heading struggling there towards that. So this is a go-to chart. The dollar yen going to be a go-to chart for you during the Bank of Japan rate decision. Okay, and the place you are watching, yeah, hopefully you understand that. Now let me pull out some risk reward ratio, all right, and let me talk about that. Okay, let's say you are using a reasonable stop loss, let's say 70 to 80 pips, all right, within these areas. Okay, and the target you are looking, the first target you are looking for this, all right, and the next target you are looking for this low, all right. And in a best case scenario, yeah, and if something bigger is going to happen, we still can continue to keep dragging more lower up to 127. All right, so a very big move can happen over there. So this is telling us that 1 to 36 return, all right, so in longer term potential. So let's just talk about that 1 to 20, all right, so 1 to 20 if you hold that trade for longer term, all right, so 1 to 20 potential can appear over there on this chart. So you are watching this chart very closely, all right, as we can see that the officials from the Japan, they are also saying that they are not happy with the speculative moves on the dollar yen, all right. So yeah, just watch that. Okay, and very much similar kind of trade we can expect on the CAD yen. All right, a slightly, not that much potential as with compared to the dollar yen. Okay, but the second best potential on yen pair is going to be the CAD yen. Okay, this. Hopefully now you understand that. All right, this potential, or at least up to this. All right, already broken down. Okay, if it tests that, right, then you are expecting that to hold that high. All right, or the moving averages on 2-hour time frame. Yeah, get this place to hold. For short term, you're looking for this trade first within these ranges. All right, so this is what you are expecting. Yeah, and in best case scenario to continue to keep dragging lower. So it has already broken. If I'm going to look at the patterns, so pattern is saying that we have already broken down. All right, and heading towards that low. So we got a breakout of this, right, and we are heading down. Okay, heading down, and if we test that, then you're expecting it to continue to keep dragging lower. So I'm going to ignore these charts. You're not going to have a good potential in these two charts, Kiwi yen and Uzi yen. They are more bearish as with compared to the others. All right, but the idea is very much same like the others. All right, I'm gonna ignore these two. So we got a drop here. Bang on. We were talking about this last week, all right, in details, that central banks, they are watching their currency, even governments are watching, and bang on, we got a drop on this. So there is possibility we still can climb up back to that top 7.36 high or 37 high. If you test that, then you're watching that resistance to hold and this currency to go down. So dollar peso. So dollar peso is simply a longer term buy opportunity. Okay, we were talking about for buy here. Someone was asking the dollar peso. Okay, we are bang on longer term buy opportunity. That was a longer term buy opportunity, but the cost to hold that for longer term is so high. So still expecting it to continue its trend. All right, yeah, still, because the rate was very high in Mexico and they have to cut the rates more aggressively than others, which gonna be the ultimate driver for this country currency to stay trending for upside. It can go sideways for longer term like this. Okay, so somewhere within these ranges, guys. Okay, like this. So yeah, but yeah, still bullish. Just keep climbing higher towards the all-time high. Oil may fall for another leg lower back to the floor. It's already falling because Donald Trump is saying that energy first, energy emergency, yeah, make America great and make America great again in energy. So yeah, oil can continue to keep dragging lower. Yields I have already talked about. Okay, so here is the point. I said that there is a risk for crash. Yeah, keeping that thing in mind, the equities can crash. Okay, so you cannot rule out that risk now. So last time, this is the breakout happened over there. This breakout happened. Okay, I had that chart. If you come back. So we had that chart here when that crash happened. Let's quickly find that. So we can the Nikkei chart. All right, so I had Nikkei chart. I posted that Nikkei chart, the crash chart here, maybe here or maybe on the Twitter. So '31st, long time ago, 31st of July. So it's September. There you go. There you go. This is the chart. Okay, that's the chart. Okay, so there we got a big move over there on the Nikkei. Okay, so we got a crash, bang, 30. It went up to 30. The news caused that this breakout and then went up to 30. So keeping that thing in mind, the risk is still there. Okay, that crash risk. Okay, what we saw nice move after that. Okay, nice move after that. That the charts are already there. So the move started. Yeah, this is at that time, the 31st of July. You see that charts are there. 31st July when dollar CAD, held that top, and then bang, the big move came over there. Very big move came over there. So same again. Okay, same again, and there is a risk if I'm gonna copy paste that. Okay, if I'm gonna copy paste that, there is a risk for that move. Okay, we may not get that much big leg, all right, but you cannot rule out these lows. All right, so if I'm gonna make it more simple for our understanding, all right, what we talked about on dollar yen or on yield. Okay, we talked about on the yield that the yield can visit this low. This is a day chart. All right, this is a 4-hour time frame. Let's make it to day. All right, so if we get the yield, okay, let's say, yeah, this is the low, so we get the yields driving all the way to that low. Okay, then at least the Nikkei has the potential to fall to this low. This is the risk. Okay, we cannot rule out that risk this week or next week. Yeah, so no buying. Simply, you are not looking for buy on the Nikkei index, or more you are simply getting ready for it to hike to come. Okay, when hike comes, simply when they raise the interest rate, simple that you are looking for this to fall at least up to this low minimum. Okay, this low, and in best case scenario are like this much sharp or this much sharp. Okay, right, so if I'm gonna zoom out and look at this, so you're paying attention at these places, this correction that is struggling. Yeah, so the hike is very important, guys. I'm talking about this. They're supposed to be 50. The actual results supposed to be 50. All right, the previous is 25. The projection is 50. All right, if this 50 comes, there is a risk for carry trade to wind up. Okay, and that can drive these charts aggressively lower. Hope that makes sense. Okay, and US equities can also be under pressure. Last time, 31st is here. Okay, last time we saw this much drop. Okay, we saw that 7% drop on the US 30 on 31st of right at that time when there is the interest rate. Bang on, carry trade started to play out on risk on equities. Bang, drop. Alright, so 7% drop came over there, and then we got so you cannot rule out that last week we were expecting a buy opportunity. All right, a trending move over there. Bang on, we broke out these corrections over there. Okay, and then a decent move happened over there. All right, no, till Friday. Okay, till Friday, I'm not anticipating this to hit all-time high. I'm just anticipating it to just maybe stay sideways. Okay, and BOJ can drag it to that low. So we are ruling out for the trend to continue for this week. All right, and we'll see how things unfold next week. All right, and more likely we may see another leg lower. So bullish scenario is out right now from the Yeah, so bullish scenario is out. Okay, so same with the 100 Nasdaq 100. All right, one more leg lower simply. Okay, not expecting it to stay trending till Friday or till next Monday. All right, and let's make it more simple, guys. We'll see how, when we're gonna come back next week, we'll see how the BOJ unfold on Friday. Okay, but more likely equities to not stay trending. All right, and go more likely back to the floor. All right, so same on this chart. We can expect another leg lower. Okay, so now let's look at some coins. We have some meme coins last week, from the Trump coin and Melania coin. All right, so bang on. Some people, those who were tracking this coin so early when Donald Trump tweeted that he's going to announce its coin, bang on, that was a buy opportunity. But it happened so fast. So many people, they were not aware about that move. So it went from bang from one, even below 1 to 70, 80. Yeah, so in in 2 days. All right, and then when he came into the office, sellers they came in and then bang on. All right, so sellers are in control. So what is the possibility here on this coin? There is possibility for another leg higher, okay, back to reclaim the 80. All right, and how it unfold after that, we'll see. But there is a possibility that this coin still can tag that $80 mark. Okay, and how, if you are trading, what to look for, what to do. All right, so you are not chasing that at the current price, not chasing the way usually we do. Okay, so you are expecting it to, okay, this is just based on speculation, guys. This is just a guess. We don't know that the next leg is going to come or not, just based on the structure. Okay, the structure or the pattern which we are having is telling us that the sellers are in control, but they are slow. All right, so we saw strength for upside rather than draw. We saw more strength, right? And then we are having a correction, means that every time when you see that the low is coming out, okay, there is you're looking for buy this low, or a new low is coming out within this area. So basically this is a buy place you're expecting. Okay, or let's say you are watching it very, very closely around 20 to 25. That's where you're paying attention. Okay, and once you see that the price comes to these lows, silver is bullish, buy. Silver is a buy. I have already talked about that. You are looking silver to reclaim the weekly high, the current weekly high. I mean, not current. I will show you that chart again. All right, but bullish on the silver, as silver is lagging the gold. Okay, so you are looking at least these areas. Okay, so this trade can turn into a very good trade if you track it really closely. All right, first of all, you're expecting another leg lower. All right, this we got sell, and then again buyers came, sellers started to sell it really slowly. Sellers are in control, but they're still struggling. Okay, buyers came, they are not strong enough. We are having a correction, means that we can visit this previous low. Okay, or new low is coming out. So the short-term target, you are looking very much similar like this move, or in best case scenario, you're expecting it to go all the way and reclaim that top. Okay, so this is going to be the trade you are watching closely. It is at, even if you're gonna buy it at $20 or $25, it is expensive, guys. It is expensive coin now. It's not coins which can make you a lot of money. So it's just a trade which can give you some potential is just over there. Okay, 1 to 8 or 1 to 5 kind of trade can appear over there. All right, So it can reclaim that top. So you're paying attention, these lows are new low. Okay, and we're expecting this low drop to break out and at least claim that high. Okay, and in case if we get some good news from the Trump regarding the crypto, yeah, this is the coin which can get more attention than the others, because this is US president coin. It's a meme coin, but still hype can push this higher for upside. Okay, so this is also very much similar. So we were watching this closely when it was at close to 3 or 4, when Melania announced that she's having that coin. It went up to $12, bang on, very quickly, aggressively, $12. So we can say, let me check the potential from this low. Okay, so this is also can reclaim that top, much better potential as with compared to the Trump coin. All right, so if it goes and tests that high, all right, $12, right, 1 to 15, 1 to 14. So you're paying attention on this coin as we compare to the others. If it doesn't go all the way to that top, still can give you potential from this low to that low. So $2 or $3 is a good price. $2.50 or $3 is a good price to watch this coin, all right, for upside, and it has a potential to give you a good trade. So you're tracking these coins in the news these days, and meme coins can give you a good potential. All right, so if I'm gonna look at the Bitcoin, so Bitcoin, we were talking about possibility of the bigger correction. Okay, we reclaim that high again. Okay, but fallen short again from that high. So this is what you are expecting, price to stay within this correction for a while, and every time when you see that the price is coming to these lows, hold that. Okay, and this leg come down and breakout, possible breakout for upside. Okay, when price comes down to this low, be prepared for slight more push before we're gonna get up. So a bigger deep correction on the Bitcoin. Okay, so very much similar, not very much similar, a kind of wedge. Okay, so a buy opportunity here from these lows and reclaim that top like Bitcoin has done. Okay, this move, and if it goes higher, then we can continue to keep climbing all the way to that high. It has the potential to go and reclaim at least to that high in longer term. So that's the Ethereum, and I think enough, right? Yes, silver is a buy opportunity. Okay, so you're expecting silver to reclaim that top. Okay, in longer term, go higher. Okay, that's the trend on weekly chart. All right, so you said that weekly chart, this is what you are looking for. All right, this is what I said, that this move, this is what you are searching, that trade. Okay, how and why? Okay, we already got that move on the gold. Okay, gold is a lead chart for us here, that the silver also can catch up. All right, so we were rising here on gold. Okay, but we are still at the floor. So the move started from there to there. Okay, this move. Yeah, so gold, if gold claims all-time high, then you're expecting silver to at least this top. This is your target, at least that target. Yeah, hope that makes sense. Thank you. We'll see you back again in another weekly market outlook. Until then, bye. Hopefully you have got the idea that what you are paying attention for the rest of the week. Bank of Japan is the key rate the CN for. I mean, that's the biggest event. I think even bigger event than the Donald Trump inauguration. All right. Yeah. Okay, so thank you. We'll see you back again in another weekly market outlook. Until then, bye. Have a